Hello traders, Gary Wagner here, just about 10 minutes after 11 o'clock in Honolulu, 10 minutes after 4 in New York. It is Monday, 8th day of February 2016, and this is the Daily Report for Gold and Silver. We do have a tremendous upside surge today in gold, trading up about $22 on the day. Actually has hit a high of 1201, low 1164, and as I said, currently we're trading at about 1190, 1191 in that area. So there's absolutely no doubt. We have seen this market trade to a tremendous new set of highs. We haven't seen these highs in about 8 months. The interesting thing is we have absolutely surpassed the highs that I thought we would pass, and we've done them a lot quicker than I thought we could. Let me go ahead and show you what I'm talking about. The one key point that we wanted to see if it could take out was the last area of resistance I thought the market might hit, and that is roughly at 1187. And as you can see, although well off the highs right here, market is trading at 1189. So my question is, now that we have seen this market dramatically trade higher on the day and dramatically trade higher off of these lows right in here, whether or not it will find some sort of resistance in this area, or will it find this area to be a support area and then move up to higher ground? So traders, here's what we're looking at, and realize that on this particular chart, even though it says 97, we are currently at 89, so it is not sustained a dramatic close above this particular price point, which is the price point that I pegged some resistance to come in at. Oddly enough, we've not seen any kind of resistance in this area. We didn't see it either at 60. We certainly didn't see it as it popped up to 1100. Now, assuming that this market finds some sort of support in this area, that's an easy read. We're simply going to look to move our stops right under this area at 87. If the market does have the ability to have any kind of a sustained move in the market, the real next level that we want to look at is about 1231, which is this top right in here. And prior to that, of course, is going to be 1200, but 1200 is the point in which it touched upon today. So I do believe that we have current resistance at about 1200, and I believe that that shouldn't be that hard to break through. But as I said, we attempted to trade it to about 1201, and then from there came back down currently at 89. So traders, lastly, I do want to revisit the alternative wave count that we have been looking at in terms of the daily chart. This, of course, is a weekly chart, in gold, in which we're looking at this major move up to its record and historical high is the culmination of a major fifth. And more so, we're looking at this correction, this long correction, which began middle 2011 up till present, being the conclusion of a long protracted A wave. And in essence, as we've gone through, the way we're looking at that is this A wave is made up of an intermediate count of 5 waves, 1, 2, 3, then into a double compression triangle, and this would be wave 4 right in here. And then we have wave 5, and in wave 5 we'll get a 1, a 2, a 3, a 4, and a culmination, and that's what I want to talk about, of our 5th wave right in here. And the reason I believe that that's highly likely, simply put, is we have a defined break above this particular compression triangle. Now, what that means is that if this model is actually going to hold some weight, we can now go and calculate our model for this particular wave 1, because, or excuse me, our B wave. The first thing that I can tell you is that the culmination of the B wave is going to be anywhere between 50 and 75% that of A. We know that the move from A was roughly 1900 down to 1,000. So you're looking at roughly, as I said, we're going to kind of put this in a lot deeper over this next week. But my target for this particular move, and this is going to be a protracted move, and it's going to consist of a series of waves, but our B wave should culminate somewhere between 1400 and 1450. Now, we're also talking about a B wave that in terms of length could be throughout this year, it could be a half a year, but my point is it's a long and protracted wave. And then what we're going to look for is within this move, we're going to get some sort of a 1, 2, 3, 4, and then culminating 5 somewhere in this area. Now, the one thing about Elliott wave forecasting is that we typically use wave 1 as our benchmark for all of our other waves. So once we have this wave completed, this one, then we can go and ascertain the actual relative distance and corrections of all of the following waves. This has been Gary Wagner, wishing you, as always, good trading. We will look to trail our stops up, and I'll send out a special trade notification of that when I send the video out. Have a great day. We'll talk to you tomorrow. Bye-bye.